What is going on, Future Focus family? My name is George. We talk about investing on this channel, and today I wanted to give you some updates on what's going on in the market. I hope all of you guys been doing great. It's been a while since I've been on, but have not forgotten about you guys. Just a lot going on, but had to take a little break to talk to you guys about what's been going on, especially with the way that the market has been behaving. So, I'm not going to waste too much of your time. Let's get to it. Before we get started, as of right now, the S&P 500 is currently down 1.95%. The Dow is down 1.75%. The Nasdaq is down 2%. The Russell 2000 is down 1.26%. Crude oil is on an amazing run right now. It is currently up 2.41%. You got gold, which is breaking out of a great period. It is up 0.94% to 1,985. If you've been watching this channel for a while, they know that my price target was 1,800 before. Me and Matt, that's usually on with me, we had some kind of conversations about that. He didn't want to put a price on it, but I said 1,800 was a crucial level to watch. And since then, I've been right because the price is currently up 1986. Silver is down, but it's still up 25.61 is the price. It is down 0.69%. The 10-year bond is up 2% to 1.76. And that has a correlation with something else we're going to talk about today. We have a Bitcoin, which is down only 0.66%, which is not much. And the whole crypto as whole, the CMC averages are down, or they're actually up right now, up 2.46. So today I wanted to talk to you about a few things. All right. So the S&P 500, I wanted to take a look at that chart with you guys, and let's see what's going on there. All right. So I'm going to pull this up. So what I have for you right now is the 6-month chart for the S&P 500. And what I have with it is the moving average. So down here you have the 52-day moving average and the 14-day moving averages. And as you can see, we're slightly below the moving average. And why that's a crucial thing to look at is that moving average is something that you usually want to be above it. All the moving average is whatever time frame you're looking at, the amount that the price closed at or opened at on that specific day. And that's what the moving average is. So the moving average fluctuates depending on what the price is that day. So let's take a look at the 3-month chart. I've gone ahead and drawn some lines here that we could look at. Currently, the price, like I said, is 4,243 for the whole S&P 500. And this is a good one to look at when you're trying to analyze what the greed or fear is for the market as a whole. It's good to look at the indexes when you want to analyze that. If you have specific stocks that you're looking at, it's always good to analyze those stocks individually. However, when you're looking at things in a macro lens at the big picture, what is the entire market doing? That's a very important thing to analyze. So let's take a look at the 1-month chart. So looking at the 1 month, you can see that I labeled this $4,275 level, which is above where we're at now. And that's going to be what I label as the next level of resistance, help blocking us on the way up. If we can't break this in the next week, then the next trend is going to go down. I meant to get on with you guys before. What I wanted to look at was this head and shoulders pattern that was building. So what I'll look for you guys is, if you look at this right here, just think of this as a person. And this right here is one shoulder, right? If we come here, we have the head. And what I started seeing was a shoulder pattern. So I wanted to get to you guys, because usually when there's a head and shoulders pattern, there's a reversal in whatever the trend was before it happens. So if we go back to look at what the trend was, let's look at the 1-year chart. As you can see, there was a trend going up before this head and shoulder pattern began. So there you got one shoulder, one shoulder. If we can't break out of this trend in this area, there's going to be a next level down. So that's an important thing to look at. That's good if you want to do puts against the S&P 500. If we do break, then you can make some money on some potential puts on there. If you don't know what puts are, it's just a call option. When you buy a put, it's just saying that you think it's a bet, it's a gamble. You're gambling and saying that you believe that whatever stock, or for this case, the index, you feel that next move is going to be a down move. So this is the year to date. This is what the S&P 500 has done so far this year. So as you can see, we kind of hit a top for a little bit, and there's a lot of green days. These are big moves. You have 2% up, 2% up. A lot of people get happy, they get greedy, then it levels off for a little bit. People don't know which way to move. We have a new development going on in whatever country we're looking at, and then there's a big drop that happens. So look at that. Um, what are some of the things that we're looking for in the economy that can help us kind of determine what a potential big move could be? Will it be to the upside or downside? Well, some of the things to look at is what's going on in Ukraine and Russia. It does affect us because right now, if you look anywhere, the average price in America for gas is sitting at a really high, and we could take a look at that. But that's going to affect sentiment in the market because people have to pay $10 a gallon. It is not far fetched. In California, I looked up a place called Gordo, California yesterday. They were above $7. So, $10 is not far fetched. Even $15 is not far fetched, especially with the price of oil as it is right now. And it's being extremely volatile. It's acting kind of like a cryptocurrency, which is insane. 2 years ago in the summer, gas went negative 30. Those people uh, getting gas for free from companies because the companies didn't have enough money to store it and they were giving it away. Now, those people, if they held on to that fuel, like they just made a lot of money just for holding that fuel for free. So just that's a small investment in itself. This is something else I want to look at. CNN has something very cool called the Fear and Greed Index, and it just paints a picture as to what we're looking at in the market. All right, so these are the indicator. Right now, there's extreme fear in the market. We're at a 14. A month ago, we were at a 35. A week ago, we were at 24. So you can see there's a trend. 1 year ago today, we were at 51, which is right in the middle, neutral. Then there was 35. There was a point where we were extreme greed when we were at the 75, 65. But it's been people are getting more and more cautious about what they're doing in the market. This is determined by a bunch of things, but one of the things is bonds. So the bond versus investment grade, that's been on a decline, but it's kind of bumped up. As this goes up, the stock market goes down. There's kind of a correlation there. It's gone up right here. They're accepting 1.8 percentage points in additional yield over safer investment grade corporate bonds. So people are picking bonds over stocks at a more alarming rate than they have been doing previously. So the number of stocks hitting a 52-week low exceeds the number hitting highs and is at the lower end of its range, indicating fear. So as you can see, there's more that are hitting 52-week lows than they are hitting 52-week highs on the New York Stock Exchange. Um, Put call options, as we talked about, those are just options. That's the way to kind of gamble in the market. As you can see, it had a big decline down here, but during the last 5 trading days, volume and put options has lagged volume and call options by 44.43% as investors make bullish bets in their portfolios. However, this is still among the highest levels of put buying seen during the last 2 years, which is very important. So there's a lot of people buying call options because they feel that once everything passes with the Omicron, everything passes with Russia and Ukraine, and the Federal Reserve potentially raising the yield to 0.25 basis points. All these things pass, then they foresee this summer there's going to be a big bump up in the market as a whole, and people are making bets on that, as you can see right here. So stock price breadth, the McLean volume summation index measures advancing and declining volume on the New York Stock Exchange. During the last month, approximately 8.10% more of each day's volume has traded in declining issues than in advancing issues, pushing this indicator towards the lower end of its range. So that's another thing to look at. Market volatility. So this is the VIX. I have it pulled up here on the chart as well. But the volatility index is at 34.4 and indicates that investors remain concerned about declines in the stock market. The last changed from 25, and right here you have the trend. So you can see the moving average in blue compared to the highs and the lows of the VIX. The VIX, all it is the S&P 500 backwards, and that's all it is. And this is the 50-day moving average right here. Safe haven demand, how much people are putting in bonds and as well keeping in their savings accounts. So bonds have outperformed stocks by 7.4 percentage points during the last 20 trading days, which is huge because that hasn't happened in a long time. This is a close to the weakest performance for stocks relative to bonds in the past 2 years and indicates that investors are fleeing risky stocks for the safety of bonds. People are worried about what's happening out there. One of the big things to look at here is that this is more of a permanent thing. When people are going into savings accounts, that's kind of a temporary thing because they could jump right into something else. But when they're jumping into a bond, they're making a commitment there and they're putting their money here and they're locking it up for a while because people that go into bonds don't usually sell out of them right away. Then you have market momentum. The S&P 500 is 6.3 below its 125-day moving average during the last 2 years, and the S&P 500 has typically been above this average. So rapid declines like this indicate extreme levels of fear. So there's a lot of fear. We're going under that 125-day moving average, as I had pulled up earlier, and we looked at, and we're below that, and we're kind of very below that. So just be cognizant of that. All right. So this is the same thing, but this is just cryptocurrency because we talk about cryptocurrency, we talk about gold, silver, we talk about all of that. And this is where the fear and greed index is for the crypto market. That's where the sentiment is. So there's extreme fear in the sentiment in the market for this as well. And that's been evident as you've seen the price fluctuations. You can see the over time. Let's look at 1 year. As you can see, this is the way it's fluctuated. So we're not at the peak of greed, which would be the higher end. We're at the lower end, closer to the lower end uh, uh, for fear. So why measure this? The crypto market behavior is very emotional. People tend to get greedy when the market is rising, fear of missing out. We talked about that all the time. And there are two simple assumptions. Extreme fear can be a sign of investors are too worried. That could be a buying opportunity, or investors are too greedy, which means the market is due for a correction or currently going through one. Uh, Bitcoin is still in a bear market because it was once at $60, $60,000. I apologize. And now it's at 38,000 and it's even gone down. So it's below 20% from its high. So it's been in a bear market. The next bull run, I talked with my brother earlier today. The next bull run, I predicted to go to 110,000 and then it'll fall again. This will happen again, but it won't fall all the way to 29,000 the next time. I see it falling to 43,000, which is kind of a price that I put down for it. So we can come and look at it over here. This is the Bitcoin chart. I put some key areas here. So 34,000 was like the supreme low. This is like the extreme bear case currently for me. This is where I could see it going, but it's very like far fetched that it would go this far down. 44,000 is a level that's been a very, very heavy resistance level going back. This is a year to date chart. So from January 1st to now, where we're at, we've been on a decline. Again, this is the moving average in relationship to where we're at in the blue. And you can see the right here kind of a inverse head and shoulders pattern, which should mean, right here you have one shoulder, this is the head, and right here you have another shoulder. So if we can't break over this 44,800, we're either going to trade sideways for a while, which means we're not going to go up or down too much. We're going to trade in between that 38,000 and 44,000 level, which is great for people who trade crypto. But as a long-term investor, that's your time to accumulate. If you really believe in this as a trade, this is your time to accumulate that cryptocurrency and try to get it for the low for the longest period possible. That's the great way to do it. Don't try to hope that it goes up right away unless you're a trader. Traders, that's what they hope for. They want the big moves. But as a long-term investor, you want to buy it as low as you can for a long period of time. And then when you're ready to retire and you're really ready to sell it, that's when you're hoping that little by little it's gone up, it's gone up, it's gone up. And now it's at a point where you've made 10x on your money and you could, buy a car or something and still have your initial investment still in the asset. Taking a long look at the 5-year chart, here you see this is why I labeled it at that period of resistance. And I think just bouncing that support level right here, I could see it bouncing off of that right there. Taking a look back, we go to the VIX, and this is just to look at the VIX through time. This is the 1-month chart for the VIX. It's been slightly increasing, and this is the volatility index, measuring the volatility in the S&P 500. call buying and put buying, call selling, put selling. Is not at the high range. If we go look at the 5 year chart, we did reach a high. This is during the pandemic. We reached a high when it first got announced and people got really, really scared. We're not at those levels yet, you know. And can we get there? Yeah, we just haven't been at those levels in a while. The second time, other than that, was 44. Then we had a 41. Since then, it's been dropping slightly. As you can tell, you know, there's a pattern. High, high here, the high, but it's lower, a lower high, a lower high, a lower high. And that's kind of what you want to see. What I'm starting to see here is a trend going up, higher high, higher high, higher high. And that's not exactly what you want to see on these days. So just keep that in mind. If we continue this trend down of lower lows, we'll be good in the volatility index. So I want to know what you guys think about all of this. I want to know how you guys are playing the market. How are you guys handling it? What are you guys investing in? Are you guys investing in stock right now? Or are you holding on? Are you investing in cryptocurrencies? Are you holding on? Comment below if there's a specific stock or cryptocurrency that you want me to make a dedicated video just to that and talk about my sentiment towards that specific stock or cryptocurrency. You know, challenge me. I may have never heard about it before, so I may have to go back and do some due diligence on it. But I want to bring you guys more content now that I'm done with this one class I was doing. I got more time for you guys now. So just fill me in. Let me know what you guys are doing. Are you investing? Are you selling? Are you just holding on for dear life? Let me know what you guys are doing. Me personally, I'm just holding. Bought some stuff today. I saw some good prices today. So I went in there, made a few purchases. Nothing big, small moves. You know, I call it dipping my toe in, just seeing how it is because it's volatile out there. Everything could always drop. But you don't want to be too scared to jump into something, especially when it's down 30%, 40%, 50%. You know, some things get oversold. When that green index, you know, that we looked at, when it's too volatile in either direction, that's the time to make the opposite move of wherever it's at. If people are too greedy, that's when you should be selling. If people are too scared and there's too much fear in the market, that's when you need to accumulate whatever stocks or cryptocurrencies that you guys have been looking at. There's other things to look at, you know, other considerations. But if it's a company that you feel is making money right now and they're going to continue making money in the next 5, 10 years, whatever your time horizon is for investing, then go ahead, dip your toes in it, you know. But if you're still worried about it, drop a comment down below, whatever stock or cryptocurrency, and we'll make a video about it. All right. As always, invest in me and press that like button. Invest in yourself and smash that subscribe button. It costs you nothing. Until next time.